Hi, good evening, guys. All right. So thank you guys for those who managed to attend today's session. And today's session, guys, we're going to talk about trend lines. If you are a trader, you'll be familiar with trend lines because they are very important part of tools that you have to use as a trader. So for today, that's what we'll be focusing on. And if you remember from last time, we talked more about imbalances, types of imbalances, and the like. So for today, our focus will be trying to stick together what we learned so far, because that is very important for us. And if you remember well, the previous sessions, we talked about types of imbalances, like how many imbalances are there. And we said we have two types of imbalances. So which are types of imbalance, types of imbalances. We said we have two types of imbalances, right? We have valleys and peaks. And two, we have continuation patterns, also known as CPs. Let me see that I want to mute participant. All right. So note that. And the other thing that we talked about was what are valleys and how can you locate them? And we discussed something like that. A valley usually it's a V-shaped formation that is very common at the origin of a bullish impulsive moves. And also we said a valley is made up of three features, and these two are very important. We said valleys are made of valleys are made up of three features, number one, which is a legging. We have legging. And number two, in formation of valleys, we have something called a basin structure. And number three, we have something called a leg out or a bullish move. All right. And also the other thing that we talked about was that the basin structure of a valley or a V shape may be formed by 50% candles. And sometimes you might find a valley that is formed on ERC, like ERC cables. I mean, ERC candles are like drop ruddy. Like those long cables are called ERC candles, right? And then the other thing that we talked about was we have also something called a peak which is an inverted V shape. And it's the same like a valley because they are very common at the origin of a bearish move. And yes, like a valley, a peak is made up of three features, which are still is the leg in, or a bullish move, a basin structure, a leg out, or a bearish move, right? And the same like the valleys. You can find the basins that are made up of rally drop or two RC candles, things like the bullish engulfing patterns. You can find them at the basin of any valley or any peak formations, right? All these things we said when you open your chart, you'll always find them, right? And then the other thing that you talked about was continuous patterns, right? CPs, continuous patterns. We said these are pauses in the market before prices resumes, all right? And usually you'll find continuous patterns when price is continuing on the upwards or when price is going on the downside, all right? Then remember we said the market doesn't move in a straight line. So the market, when you look at your chart, you'll always see that there are breaks that are happening as the trend develops, all right? So for some traders, they think of a CP as a pause, and that pause is where accumulation of buy orders for longs and distribution of sell orders for shorts, all right? So usually when you find a CP, you might find that's where most of people, they will be trying to enter the market there. If they are doing longs, they're putting their orders there. And if they are doing shorts, they're putting their sell orders there, right? All these three imbalances are all that you can find when you are trading supply and demand, right? And now, today, we're going to learn about drawing trend lines. And why do we draw trend lines the way we do? Okay. And you have to understand something here. Every strategy, guys, it has its own way of drawing trend lines, right? You might find that the way I'm going to teach you how to draw trend lines is different from what you already know, okay? So now, what is very important for every strategy is that as an individual, you have to prove that to yourself. You have to open the chart and see what you are being taught, it makes sense, okay? Because why? At the end of the day, as a trader, you have to personalize what you are learning. And you have to use something that is convincing you enough that indeed, when I do this, it can work for me, all right? So guys, why do we draw trend lines? What are the purpose of drawing a trend line? Number one, a trend lines, guys, we are drawing them because they can tell us about the trend, okay? They tell us about the trend, meaning a trend line, guys, it can signal to us the continuation of a trend, okay? If respected, usually when it's respected, it means the trend is continuing, all right? Or it can indicate a reversal, right? A reversal or a pullback within a higher time frame if broken, all right? A reversal when it's broken, all right? Or usually trend lines, they can help us to identify the trend once we learn when and how new imbalances are created. All right. So what you guys learned so far was to try to show you, to open you up to the idea of how demand and supply and demand works. So now with this, we are trying to stick that together, okay? So the other second thing is that trend lines, they help us to learn when the dynamics of the chart are changing, all right? Let's say you'll be buying that pair, it will be keep rising, all right? So when the dynamics of that time frame changes, when maybe that pair starts to fall, usually a trend line, it will give you a signal to show you that no, now man, we have, if you have been buying, stop buying. Now is the time for us to wait for new entries or for us to sell. All right. And the with supply and demand, by connecting the trend lines, guys, the way we do, you'll know very soon, like immediately, when the dynamics of the trend changes on a certain time frame, you will know, and that will help you to avoid any losses. All right. So, and why this is very important, we use trend lines with something that we call top-down analysis. Top-down analysis, here we talk about, you look at 3 different time frames before you can decide in which direction to trade. All right. So example, you must, sometimes when you open a chart, you might find that when you look at the monthly chart, price has been rising. Okay. So when you look at the weekly chart, you might find that still price has been rising. Okay. And then when you look at the monthly on the daily chart, you might find that no, on the daily chart, actually price is not rising, is going down. All right. So with the trend lines, it shows you, it helps you to know that, okay, now price is on the down, on the daily is going down, which means if it goes down, there's a certain stop where it will stop, or there's a certain zone where price will go to test that zone and go back up. All right. If it breaks that zone down, then you'll know that, okay, the dynamics of that pair, they might be changing. So you have to consider changing the way you are trading there. All right. So, and also with the trend lines, guys, trend lines, they help us to learn, to quickly learn if opposing impulsive moves are stronger than the previous ones. What does this mean? So when you look at the chart, sometimes you can find that a pair can like rally higher and quicker also. Yeah. So that moves to the upside or to the downside. Most of the time, you might find it can go up and then it eliminates something that we call a zone. So when the zones are eliminated, what happens? It also gives you a hint of what might be happening on that. All right. So again, trend lines will help us to identify potential reversals. Okay. And also trend lines, a pullback to a trend line. This is what most of traders I know, they use this a lot. The pullback to a trend line can provide us with trade opportunities. There are people who, when they trade, they see when a candle comes near the trend line, they enter their positions. All right. So that is very important. Okay. So now, when you trade supply and demand, we have two ways. We have two ways of drawing trend lines. There are two ways of drawing trend lines. Okay. Number one, we have something that is called bullish trend line. Okay. A bullish trend line. Remember, a bullish means something is going up. You use this trend line when your chart is showing that price is going up. Okay. And then the second one is called a bearish trend line. Okay. So I'm going to show you how to draw a bullish trend line. Okay. So you draw a trend line, guys. This is very important. You connect the latest two obvious valleys or peaks. The latest two obvious valleys or peaks. Okay. So remember we said when you look at your chart, you will always see a valley and a peak, a V, an inverted V. All right. So when you draw a trend line, you look at this. All right. And now you connect the valleys, which mostly they show the swing lows, and the peaks usually shows the swing highs. All right. So, and these valleys, guys, they should be the most obvious ones. All right. Yeah. So, and every time frame should have its own trend line. Okay. When you draw your trend line, here you can say never cut through the candles. Okay. Whenever you draw your trend line. So now I'm going to open a chart that we can practice drawing our trend lines. Okay, new share, and where's MetaTrader? Okay, there you are. Okay, so I guess you can all of you guys can see my chart here. This is a Euro USD chart. So when you trade supply and demand, like I said, it's very important for you to use at least a minimum of 3 time frames, right? If you still remember well, we talked about valleys. We said a valley, it will be always something like this, right? Look, this is a V shape here, okay? And you go down here again, this, if you had to draw this, you'll find this is making a nice V shape, all right? So what's very important is for you to note that always this area, look here, this area here, it should always, when you draw a valley, this area here, it should be always smaller than this one. So here you can see this, it starts here and it's end here. If it's like this, it's a valley, all right? Looks valley, they make drop, rally, and it makes a high, okay? Drop, base, rally, it makes a high, all right? If it's like this, two V's, remember you should always draw the latest 2 valleys, okay? look, now I connected the latest, my two V's or my two valleys here. Okay. And remember we said don't cut through the candles. Okay. Look, that's my trend line. Okay. Look. So what do you notice here at the top here? So for I didn't meet you guys so that maybe for now, for this session, we can be interactive. We can do it together, okay? Because what's very important for you guys to understand this. Anyone who sees the charts, what do you notice here? I'm not sure if you guys can see my mouse. Anyone? Look at my trend line here. I drawn it here, connecting these two valleys. And then when it came here, it crossed this candles. I get it. So, and remember we said a trend line, it helps us to see when the dynamics of the chart are changing. Okay. So this crossed the trend line. So if it crossed the trend line, look what happened. It crossed this. After this, Euro USD, it started to fall. It changed. Okay. It started changed, right? So I can, let me do also here. Look at this valley here. These are the big time frames. I get it. Look at this valley here, right? Just look, another valley here, right? Another valley here. Look, you connect your trend line. Okay. Remember the rule, never cut your candles. Look what happened. Immediately when this trend line crossed here, this pair started to fall. All right. That is how simple it is. Let's take this one. Let's take the, okay, I didn't want, no. I'll get to the bearish one. For now, we are still learning about the bullish one, meaning when price is going up, right? So even if you can scroll further, let's scroll further. Let's see what happened. Guys, look at here. These are two valleys here. You connected the latest V's, okay? Look, price crossed the trend line. What happened? It started to fall.
It dropped.
Yeah. Let's check another one. Let's check another one. Okay. This one is the bigger time frame. I get it. This is a V here, 1, and then 2 here. Still, what's happening here? Look, price crossed the trend line and it started to fall. All right. So, like I said, we use trend lines to do what? To tell us when that time frame is changing the direction. Okay. So,
yes.
Yeah. So now let's go to the weekly time frame so that we can see if we can still find the same thing. And remember, this price is fractal. Fractal meaning everything that is happening on another time frame is also happening on another time frame. Like everything that is happening on the bigger time frame is happening also on the lower time frames, right? So remember, guys, we are looking for bullish trend line. How do you draw bullish trend line? Let me clear this up. Let me clear this up. Okay. So this will be is very important for you guys, and make sure that when you have time, you practice this. As you practice this is get embedded on your soul. And after that, what happens? It will become second nature to you, right? Okay, let's
Yes.
look. This again, this was my monthly. Let's look here. We have still it's a V here. Let me make it bigger. Okay, this one, it comes here. Look. A nice formation of V here, right? Look. Here. A V here. A V here, which we call a valley, right? And this valley, another one, where is it? It's here. Another one, it's here. This one is a drop rally. Okay, look.
Yes.
Nice V there. Check. Cross the trend line. And now, when you go to the lower time frames, they actually going to give you the entry points where you can enter the trade. And remember, with supply and demand, we trace based on using limit orders, all right? So look, still here. Let's look at for another one. All right, I'm looking for the bullish ones. I don't want the bearish ones. Let's look for the bullish. Bullish meaning when price is rallying.
Right.
Yeah. Look at these ones. Look how beautiful they are. These two valleys, like 1, 2. Look. This is the weekly time frame. Okay. Okay. Look. Valley. Another valley. Price did what? Changed. Dropped. Right? Look.
Yes.
Yeah. Another one here. Another formation here. Okay. No, this one is too long. Yeah, this one I wouldn't take it, because why? It didn't make a higher there. So it's overlapping onto another one. So your V's, guys, your valleys, they should be straightforward. You don't need to look for them. They should be straightforward. Okay. Look, this valley here, price dropped. Still here, another valley here, cross the trend line, drop. Another valley here, look, cross the trend line, dropped. Okay, that is how you draw the bullish trend line. Okay,
Yeah.
that is how you draw a bullish trend line. You draw a bullish trend line like this. Like this. It's like this. Price will be moving like that. Okay. So this one will be value 1. Okay. And then this one will be value 2. Right. And like that, you draw your trend line like that. Okay. So usually this one will be a higher one. No, let's say a high 0. And this one is a high 1. I get it. So it's higher than this one. I get it. And yeah, you can check. Yeah, with this, drawing this so that you can see that. I get it. So immediately as it passes here, it's a valley, right? So usually what happens, these are impulse, correction, impulse, corrections, impulse, corrections. All right. So these impulses, guys, usually that's where you enter your positions. Okay. These reversals, these corrections, this impulse, they help you to join the trend. Okay, and as it gets broken, it will change the move to the upside. I mean, to the downside, like this. Okay, it's very important
Yes.
to remember this. For this one, anything to explain here for a bullish trend line?
For me, no.
All right, brilliant. Okay, so now I'm going to now talk about a bearish trend line. Remember, we said when something is bearish, it means it's going down. So
yeah,
when you trade Forex or on the market, is either we are bullish or we are bearish, right? So now a bearish trend line, it acts the same way as the bullish trend line. So now let's go to our charts. Let's go to our charts so that we can see if we can identify our peaks. Okay. Remember, for a bearish trend line, we are drawing inverted V's, or you can say we are drawing bearish patterns, or you can say we are drawing okay, let me turn scrolling off. Okay, so now we're going to draw what we call peaks. I get it. So a peak is something like this. Okay, a peak will be like this. A peak. Okay.
yes.
All right. A peak. Yeah. Or this, you can call it a mountain. It looks like a yes, I get it. So
yeah,
let's see if we can find any mountains in our charts. Usually when the price is going down, it forms mountains.
mountain.
Yes. Oh, I didn't chart scrolling. Please stop. Okay. Let's see. Yeah, let's just look at here. This is a mountain, right? Here, it's a peak, and another one here. So you connect the two, right? So trend line is respected. Remember, we said when the trend line is respected, it's a sign that price is doing what? It's
dropping.
is dropping. Okay. So you can enter as price is dropping, or you can sometimes wait for the pullback, or sometimes when the dynamics of that bearish chart changes, it will break a trend line. Break a trend line meaning it will cross the trend line. A typical example here, look here, a mountain here, another mountain here, or you can see that a peak. All right, this is a bearish trend line. You connect the latest two peaks. So look, when this trend line changed, what did it do?
It crossed.
And then after crossing, it did shoot up. Okay. So
yes.
direction changing. Direction changing. Okay. So
yes.
let me go to the money, because usually it's easier to show. Okay. Yeah, same here. A mountain here, a mountain here. Look, 1, 2. Made this is the one that made a lower low. Here, what happened? It's changed. So I got, if I guess if anyone remember our, I'm not sure if it was session number 2. So when I said Euro USD, it's reached what we call a monthly demand. So with that, meaning when it tests this area, because of the loss of demand and supply, it's expected to go up. And since that time, Euro USD has been going up. Okay. So yes. So I can even demonstrate for you this, the bearish ones on the daily charts. Let me show you. So, and the other thing, you'll just know what happens. Yeah, look here. It's a daily chart. Cross the trend line, and then it did shoot up. Okay. Here again, another mountain here. Here, cross the trend line, it did shoot up. Okay.
Yes, sir.
Another, as you practice, guys, you'll have a good eye understanding this. Another mountains, 2 mountains, price shoot up. Okay. So
Yes.
another 2 mountains here. Look, this 2. When trend line was crossed here, dynamics of the thing changed. Okay. So
Yes.
that is how you draw the bullish and the bearish trend lines. Okay. So
Yes.
now on my whiteboard, so how do you draw a bearish trend line? We said it's like those two mountains. I get it. Yeah.
Yes.
As for here, you will have a peak, peak 0, or and then peak 1. Okay. So you connect the latest 2 peaks. You should always update your chart. Okay. Connecting the latest 2 peaks. When this line is crossed, you have to consider changing your way of looking at the market. Like now we are going up. Okay.
Yes.
Any question here?
For me, no.
Okay. So something that you have to be aware of is, guys, when you draw your trend line, don't cut the candles when you are drawing the valleys and the peaks. Okay. The only cut that is allowed is the one that will be crossing the trend line dropping. Okay. Because as you draw the trend line, it's either it respect the prices goes up or the prices goes down. When it crosses it, you start to look at your thing. Like example, let me show you what I mean when I say don't cut the candles. Let me take another pair. Okay, let me take this pair. Okay. So if you are to draw a trend line on this pair, you don't do this. Let's say there's a, okay, nice. Okay, let me do this. There's a 2 mountains here. You can't do, which one will be easy? Okay, now let me take this one here. You can do this. You can't do this. Okay. Yeah, you have to touch the lower low of the previous value or peak like this. Okay. Smart like that. All right. So now somebody's asking me, you might be asking me now, how do you now enter trades when you're presented with these scenarios? Okay. Okay. Let's look at that. Now let's just Euro USD. Here, remember we said this are our two V's. I get it. So
yes,
you connect your trend line like this. And then you draw your zone here. Okay. Why am I drawing my zone here? Because this is it's where price crossed the trend line. I draw it here and then I set my limit orders. So the top area here, that is where I put my stop loss. And down here, that is where I put my sell order. Okay. So which means it is like this. That is where you set your limit order. So this was before you set this, not before this price actually happens. Okay. So what happened? It means price after crossing the trend line. Now pay attention here. Price should cross the trend line and have one candle closing outside the trend line. Yes, it should close outside here. When it closes outside here, you set your sell limit. So look, if this was a trade, I would have set my sell limit, and then price, what did price do? Reversed, tested the area, and then it started falling. That is how you enter your positions.
Yeah.
Yeah. Any question there?
No, sir.
Okay, let me go to the lower time frame. Let's say example, H4. I get it. So
yeah.
Okay, H4. Actually, anyway, should be fine. Look here. We have these two mountains here, or we can say peaks. Okay, these two here. The trend lines, when this was going down, trend lines was super respected. I get it. So price crossed the trend line here. And then when I look, this immediately as this price here closed outside of this trend line, I was like, aha, that zone is valid. So valid, you draw it. You push your stop loss here, okay? And mostly the zones that are like this, you can see this candle and this candle, we call them basing candles, all right? So usually I'll put both of them because this one are too small. The small ones, I'll put the ends, okay? And what happened? Price went up, tested the area, went up again, and then went back down, tested the area, went up. So now with supply and demand, what's very important is this. Usually the first test, this one here, you can do what you call set and forget, meaning set and forget your trade. The second one, which means the first touch, there's 80% of you of that pattern working. The second time, it goes to 60%. And then the third time, most of the time, on the third time, there's a high chances that it will break that area. Okay, so the first one and the second one, that are the most profitable entry points that you can find, right? The third one, most of the time it will break. Look, the third one here, it penetrated a bit down, and then the fourth one, it penetrated a bit down. The fifth one, look at the fifth touch. What it did, it broke that area. All right, so that's something that you have to keep. The first touch, which we call, if you remember well, the first touch, we call it a fresh zone. Okay, mostly fresh zones are high probability zones. Okay, a retested one, they are not high probability, but yes, they do work, but they are not high probability. Okay.
Yeah.
So look here again, same thing. Test, close outside. Here. Okay. So this price will have okay. Now the other thing that is very important here, when you trade, we have something that we call, when you do your stop loss, you should have what you call a breathing space, right? So a breathing space, it's X for, it actually provide you from stop hands. Okay, so I guess most of you find that you'll, when you are trading, you'll find that, oh, but this zone, I know is valid, and then it hits your stop loss. Immediately after hitting your stop loss, it goes on the direction you predicted. All right, the reason for you expressing that is that you don't cater for something called the stop hunting. Okay, yeah, so usually you can put 10 pips above your stop loss like that. All right, so that even if that happens, you know that now I still have room. Okay, if it kicks you out, then you're like, okay, I tried by all means to be on that trade, so which means I'll try another one. Okay, so now look here, look at this two here, rally up, rally up. Okay, all this. Where did it cross? Somewhere here. This is the only valid entry point. Yeah, and then it made a mountain here, and remember we said the V's, they help you actually to enter positions again. So V number one, I mean pick number one here, or mountain number one, and then the second mountain started here. So this mountain, this is an area, this is too tiny. What do? You draw all the whole candle. So look what happened. Price came here, touched the area, dropped, right? So same thing. Any mountain here? Nope. All this. Okay, look. Is this a higher there? Let's check. Yes, there's a higher here. So if it's like this, go up there, and then here it was crossed the trend line there. What happened? It touched, then it went down. Okay.
Yes.
another mountain here. This two, now cutting my valleys. I don't cut them. This and this. Where did it cross it? Here. Okay. You draw it. So set your buy limit touched. So I guess as I'm drawing this, I guess you realize something, that price, when it turns, most of the time it doesn't turns from just nowhere. It usually turns from a certain area. So what I'm trying to teach you guys is for you to be able to pick those areas. Look, this is a nice V here, or you can say we call them mountains. Nice mountain. Look, crossed. When did that move start? Here, because this one is a basing. Yeah, what happened? Consolidated away here, touched it, went up. You make your sense. Okay, let's check the second time. Touched it again, went up, right? So, and if we had to draw this latest one again, we have this one. Where is it? Okay, the ones that I'm connecting is this and this one. Like this is a V here. This one is rally, is the lower low was here, then up again, it makes a V. Okay, what happens? Yeah, so here, if you remember what I said you can also enter at your V's, at your mountains, at your peaks or valleys. I get it. So yeah, and then the other thing also for this other trades, for you also to avoid missing on trades, instead of on top of that level, you can, when you set your limit orders, you just add extra 10 pips. Okay, so look, from this valley here, price came, tested it, went up. Okay, so it will come second time. If it tests this for the second time, remember, now this zones is not fresh. There is a high possibility that when you look here, price can fall down further to here. This is Euro USD. So if it breaks this trend line, it will have made a lower low and you'll have another mountain here, right? So on the H4 now, it's not yet. So a VIG, if it made a lower low here, somewhere here, so let's say somewhere here, make a lower low, which means it will be respecting the trend line and you'll expect it to go down further. All right?
Yeah.
Let's check another pair. Maybe this one, pound JPY. So this one, it was very tricky. Let me show you what it did. So look, it made a higher high from here. Technically, it means pound JPY is uptrending. Okay, look, it's uptrending, and anything here, let's check. Okay, it tested this area 3 times. Let me show you. Okay. So this area is actually the one that's been controlling pound JPY for months. Like first month it touched, went down, second month, second time again, third time again, and fourth time again. So the expectation is for price on pound JPY is priced to come reach here. This is the only valid area where we expect price to go. So we expect pound JPY to reach this area, all right? So if you go on the weekly, let's check it again on the weekly. Let's see if our trend line will be still respected. So remember what you do, we draw our nice trend lines. Okay, look here. We have a valley, another one here. So we draw our trend line. This is our weekly trend line, okay? Meaning here, price broke this area, okay? It broke the trend line and then dropped. When price dropped on the weekly, look where it went. It came to just a bit near this area, okay? And then after that, it went up again. So why am I not vouching on this area being strong is because it's been tested multiple times, like 1, 2, 3. So expectation is for this candle to eliminate, to break through that area, right? So let's go to the daily. Let's see what's happening on the daily time frame with this pair. Pound JPY. I took a loss from this trade. For now, I'm just waiting. I'm going to use something we call confirmation trading. I have to confirm first where it goes. Like here, again, remember we always work with trend lines. A peak or our mountain, I draw my trend line here. Okay, so on the daily, the area that I have is this one, but it's no longer valid. Why? Because it was tested on the H4. Look here. Okay, so it was tested on the H4, and then after that, price has been going up. H4, look what's been happening on the H4. Trend line, it's super respected. So possible entry positions, entry points. 1, 2, okay? So yeah, on the H4, now here, on the daily, if price somehow breaks this area here, my buy order, it should be on this, because why? This area, it means it's a super strong area that managed to remove this monster here. Okay, well, we can, for some people, they will say there's a resistance there, right? So Anything here? Anything that I should explain here? Okay. Let me see. Let me see something here. So I'll advise you guys, make sure that you open the chart and you study it. What I'm trying to do is just to open your eyes so that you, when you look at your chart, you will see something, right? And please also abstain from taking trades based on emotions, okay? If you are taking trades based on your emotions, guys, you are a gambler, all right? Gambling, you know, in the long run, the house wins and you will lose more. So with trading, that is the rule. Don't gamble, right? If you want to stay long in the game, don't gamble. And the other thing that you should also avoid, guys, please stop giving people your money to trade for you, okay? If you have time, what is very important, learn the skill, okay? Because remember, you have your certificate, you have your master's, your degree, your diploma. No one can take that from you. I get it. So if you know something, you know it. No one will take it from you, okay? So take trading as a business, right? You go to school to be a doctor so that you can treat patients and also provide for your family. The same thing with trading. You learn to trade so that you can master it and be profitable and be able to take care of your family, right? Because with trading, you master the skill, forever you'll know how to compound your money. Actually,